What if I told you that 2025 could be the year when unlimited withdrawals, surprise rate shifts, and a long-awaited financial reset finally collide in a way that catches millions off guard? And what if I told you that today's update from Frank26 contains details that could completely reshape how currency holders think about the Iraqi Dinar's next major move? So, before we go deeper into this powerful breakdown, make sure you like this video, share it with someone who needs clarity, and hit subscribe, because what you're about to hear is the exact kind of information most people overlook until it's too late, and today's analysis could genuinely shift the way you prepare for the months ahead. As 2025 approaches, the global financial landscape is shifting faster than many anticipated, and Iraq has placed itself at the center of a monetary transformation that continues to raise eyebrows, spark debate, and build anticipation for what could be the most significant rate adjustment the country has attempted since its post-war restructuring. According to the latest commentary circulating through major intel circles, including the detailed insights shared by Frank26, the possibility of expanded liquidity access inside Iraq has become a core discussion point, especially as the country works to stabilize internal banking operations, transition further into digital finance, and position itself for international compliance standards that support a future-ready economy. These suggestions about potential unlimited withdrawals in 2025 are not just rumors. They are rooted in changes already happening inside commercial banks, where limits on cash-based transactions have gradually softened, digital platforms have improved dramatically, and government-led initiatives continue pushing citizens toward a modernized financial system designed to reduce corruption, track movement of funds, and increase international confidence in Iraq's banking sector. When these elements combine with ongoing pressure from global financial organizations encouraging Iraq to move toward a more realistic and globally accepted exchange rate, a picture begins to form. One where the IQD is slowly being prepared for a stronger position in the international marketplace. Frank26's latest update emphasizes that these small yet critical steps are not accidental. They are part of a long-term sequence that Iraq has been building toward for years, carefully adjusting internal controls, cleaning up monetary policy, and expanding global trade partnerships to ensure that whenever the time comes to reveal new rate mechanisms or adjusted global values, the nation is structurally ready to support it. Many currency holders overlook the fact that Iraq has invested heavily in modernizing its financial systems, integrating with international networks, and sanitizing its banking environment to reduce fraudulent activities and stabilize capital flows. And these are all key prerequisites for any major revaluation or rate shift. As 2025 approaches, more analysts are pointing toward increased transparency in Iraq's financial reporting, more consistent statements from the central bank, and a noticeable shift toward tighter control of currency auctions and foreign reserves, suggesting that Iraq is preparing the stage for something with long-term impact rather than short-term fixes. This script will help you understand exactly how these gradual developments tie together. Now, when Frank26 discussed the potential for unlimited withdrawals in his recent update, he wasn't implying that Iraq would simply open the floodgates overnight. Instead, he highlighted that the banking environment is moving closer to a phase where citizens, investors, and international partners could access liquidity without the strict caps that previously limited economic activity, and this shift signals a dramatic increase in confidence behind the scenes. To understand why this matters, you need to recognize how Iraq's financial system has been historically constrained by limited cash availability, heavily controlled currency auctions, and policies designed to restrict excessive withdrawals to prevent destabilization in the local market. The introduction of digital banking, biometric systems, and enhanced verification tools has slowly reduced the need for these strict limitations, and as Iraq continues modernizing, it becomes more feasible for banks to allow larger or even unrestricted withdrawals, because the infrastructure required to track money, authenticate users, and maintain financial transparency is now stronger than ever. Frank26's focus on this development ties directly to the potential revaluation narrative, because a banking system prepared for higher liquidity flexibility is also a system preparing for future rate confidence, meaning that people will need to access funds quickly, efficiently, and without the bottlenecks that have plagued the system for years. Now here's where the 2025 connection becomes even more interesting. Iraq is expected to complete additional financial reforms, finalize international audits, and enhance cross-border settlement protocols through the coming year, creating the ideal conditions for a more globally recognized exchange value. Experts analyzing these trends note that Iraq cannot sustain long-term economic growth, foreign investment, or international trade without adjusting its currency to a rate that reflects its true assets, production potential, and modernized financial architecture. This is why Frank26 and many other analysts highlight that each small update, whether it involves card activation, streamlined digital withdrawals, or upgraded banking policies, should be seen as part of a much larger puzzle. When you observe the broader economic picture, Iraq's moves indicate preparation rather than hesitation, suggesting that the country is intentionally laying the groundwork for a stronger, more predictable financial system that can withstand the pressures of global recognition. Many viewers ask whether the IQD is actually close to a major shift, and while no one can give an official date, the pattern of reforms, combined with new legislation supporting foreign capital, debt restructuring efforts, and the acceleration of banking modernization, points toward 2025 as a year of significant possibility. Iraq's currency cannot remain artificially suppressed forever while its internal economic indicators continue to improve, and the actions being taken now resemble the early stages of many historical currency reformations seen in other nations. The truth is that the world is watching, investors are watching, international regulators are watching, and every move Iraq makes draws attention because it signals intent, direction, and readiness for the next major step in the RV process. Stick with me, because the next paragraph will break down how these changes affect global currency holders and what specific indicators you should monitor if you want to stay ahead of the crowd during this. For global currency holders, the possibility of unlimited withdrawals in 2025 and the signals pointing toward a more internationally aligned exchange rate carry major implications. And the first thing you must understand is that a financial shift inside Iraq never happens in isolation. It triggers ripple effects across markets, partner nations, and investor communities worldwide. When Iraq strengthens its liquidity access and aligns its monetary systems with international standards, it sends a message that the country is preparing to function at a level consistent with global financial expectations, and this often precedes stronger currency valuations or major monetary adjustments. Frank26 emphasized that people watching the RV process must look beyond single statements and instead observe the pattern, because patterns reveal what announcements cannot openly confirm. Iraq's increasing transparency, rising foreign reserves, stabilization of internal markets, and enhanced cross-border financial cooperation are not random developments. They are the foundation upon which major currency transitions are built. If Iraq moves into 2025 with policies enabling unrestricted liquidity, stronger digital infrastructure, and increase control over capital flow, then currency holders should anticipate a period where the nation positions itself for a realistic rate rather than a suppressed one. It is also crucial to note that global partners follow Iraq's progress closely because many nations rely on regional stability and transparent financial activities to maintain trade routes, investment pipelines, and economic security. As Iraq continues modernizing, it becomes a more attractive partner, and this expands pressure for the country to eventually reflect its economic potential through a stronger, more globally accepted currency rate. Whether you are a long-term IQD holder or someone simply keeping an eye on global currency movements, these developments matter because they show that Iraq is no longer operating in a cycle of delay, but instead advancing through measurable progress that aligns with global financial expectations. The final takeaway here is that major monetary transitions do not arrive as surprises. They arrive as outcomes of years of preparation, and Iraq has now reached a stage where its policies, banking reforms, and economic strategies are building toward something bigger. As 2025 approaches, stay alert for official statements regarding digital banking expansions, further withdrawal policy adjustments, and international compliance certifications, because these will be the final signals revealing how close Iraq truly is to announcing the next major step in its currency evolution. And before we close this video, make sure you hit like, Drop a comment sharing your thoughts on the latest updates, subscribe to the channel for more in-depth breakdowns, and share this video with someone who needs clear, original, and reliable information. Because the coming months could be some of the most transformative moments this community has ever seen.